Let's talk about stocks that are on the move after hours. And this morning, Peloton is among your stocks to watch right now. After the bell yesterday on the street, the fitness company reported quarterly results that did top expectations. However, Peloton also showed mounting losses and slowing revenue growth. Joining us now to talk about Peloton and a couple of other stocks is Sarat Sethi. He is managing partner and portfolio manager at Douglas C. Lane and Associates, also a CNBC contributor. And this may be the earliest telestration that has ever been done on CNBC. So congratulations, Sarat.
Good to be the first.
All right, let's start off with Peloton here because that's a big mover after hours. I mean, look at that move. What do you make of Peloton, its move, and the stock in general?
So I think this is the classic example of where revenue is slowing and cash burn is increasing. So the question is, when Peloton can say we're actually going to be cash flow positive, I think you'll see the stock actually start going that way. But for the time being, I think you've got the momentum players in here probably getting out, but you'll get value is too early. And the stock's probably going to stay in there, and it'll probably move up to the next quarter until they give us some guidance as to, hey, maybe it's 2021 or 22. And you can see companies like Uber are trying to do that too, because you've got to slow the cash burn and actually show when we're going to be cash flow positive.
I mean, does cash flow positive matter in this market? We have a lot of companies that have no free cash flow that have done pretty well.
Well, and some that haven't now, too. So
Yep.
I think the market's bifurcating. Are you going to be a leader in this space? And I think Peloton has a little more competition than some of the others that are just burning cash. So if you've got competition, you got to worry about it.
Let's move on to another stock, Grubhub. That stock whipsawed in after-hours trading. Fourth quarter revenue, again, beat estimates. However, again, the company's loss of 5 cents per share was a penny worse than expected. Revenue guidance, though, was in line with expectations. And when we say whipsawed, I mean, this move here, Sarat, it was like, oh, great numbers. Oh, terrible numbers. All in with like two minutes.
Yes.
What do you make of Grubhub longer term? Forget about this 2-minute spike.
I think Grubhub is one of those, they're in a space that's really competitive. And you're going to see consolidation in this space, and I don't know if they're going to be the ones doing the consolidation or getting consolidated, but I don't think this is a space that you want to own for 2 to 3 years.
Well, they've talked about what? Strategic alternatives. There's been commentary from sort of management around where do we go, what do we do? You got Uber Eats, you got DoorDash, you got Postmates, you got everywhere.
So I don't believe that as an investment, as a trading vehicle, yes, but I'm not.
I mean, look at this longer term chart. I mean, when I say longer term, it's basically when the stock has been in existence.
Exactly. So one to trade, but longer term, harder to be in.
All right, let's move on now. And you heard about this Tesla thing?
Just a little bit.
What a wild week it has been for Tesla. And by the way, we got 2 more trading days left. All right, so if you're just waking up from like a 3-day nap, shares of Tesla were up nearly 20% Monday, about 14% on Tuesday. But then they fell 17% yesterday, maybe after a company executive said that cars initially scheduled for delivery in early February will be delayed because of the coronavirus. Those are cars, of course, made in China. So Tesla, and you got a lot of retail investors on Robinhood and other things like that, these apps buying 1 or 2 shares. The number of retail investors that appear to be getting into this stock now is really high. This is obviously an epic tale for this stock. What do you make of it?
So, great company, but history will tell you that fundamentals at some time will override really what the stock price does. So what I would tell people who are chasing it at these levels, be careful, manage your risk, don't put all your money in one stock. I would say that to any stock, but especially one that's going to have a roller coaster ride. I mean, this.
Yeah, by the way, this is 5 days. The chart that you're seeing here, I mean, this looks like a 10-year chart. This is just 5 days from whatever 620 to almost 950.
Right. And this is not a good positive right now. So you will.
No, that's more than 2. This is
which if you look at that,
$200 down.
Right.
But
on the other
almost
side,
400 up.
So I think the volatility in this one, you really have to manage and where you want this in your portfolio.